Hello and welcome to our fourth Working Capital Management web chat, in which we will be addressing the impact of UK Payable Reporting Regs. We are joined by Brian Shanahan, CEO and founder of Infometer and termscheck.com. And we are going to be addressing three aspects of this problem. First of which is, what's our understanding of what's going on? Brian, you've done some surveys recently and found there are differing levels of understanding.
Yeah, well, to be honest with you, Jack, when I saw this first, it was only about 6 weeks ago. And I was curious that if I hadn't heard of it, well, who had? Because I do look quite closely at these things on a regular basis. So I put a survey out, and this basically is what came back, which, only 23% of people in the UK that were surveyed actually knew anything about this at all. So equally 77% had no idea that this was happening.
And these were corporate treasury people, yes?
Treasury and finance people. So I thought that was quite scary, given that one part of this legislation is that if you don't comply, you're actually potentially committing a criminal offence. So it's quite important that people know. And the second issue I've got with this is that, and this is the reason that I've called this regulation by stealth, is that this is a classic piece of business legislation that's come out from the government, which had a 12-week consultation period. But one, I don't know who was consulted about this, and it doesn't appear that anything changed as a result of any consultation, which I think is a real problem.
So how do you keep abreast of this? As a head of payables or head of treasury, how do I keep abreast of this?
Well, unfortunately, unless you have your mitts into every little piece of legislation that happens, then it can be very difficult. And you can imagine all the hundreds of pieces of regulation and so on that come out from various different departments all the time. So, this is not an easy process for anybody.
So who does it apply to?
It applies to all what's defined as large UK companies. So that's basically companies with a turnover of more than 46 million or more than 250 employees. Now, that also includes UK subsidiaries of foreign parents. This is a real catch-all for many, many companies. And the problem is going to be that, for some very, very large multinationals, they probably have systems and people and so on who can develop these reports and so on. But the smaller the company gets, the less likely it is that they will have an internal capability of making sure that they can actually report on all this. And the key point here is, if you look at point 5 on the slide, one of the key points is you have to report on all invoices paid 30 days or less, then all those paid between 31 and 60 days, and then those paid beyond 60 days. So these are not normally reports that people generate. So someone's going to have to generate new reports that will give the answers to these things.
And where are the reports submitted? Who then reviews them? Yes, who's the regulator?
Yeah, there's a website where you're supposed to put in all this information, which is being developed as we speak. Actually reporting the information in a formal sense will be very straightforward. It's actually generating the data that you're going to report is the problem.
So how are companies from around the world going to do this? Are they all going to have to comply?
Only if they have a UK company as part of their group. And it'll be the same problem for everybody, that they will all have to report, whether they're foreign parents, UK parents, whichever. And one other point is, this does not apply to expenditures for financial services such as insurance and so on. So that has to be split out too.
Sounds interesting.
Well, it all depends on whether people actually have, this kind of data classified in such a way in their own systems as well.
And when are they going to have to do it from?
Well, the regulation came in as from the 1st of April this year. Should mean that the first reports come out in 6 months' time. And the indications have been that first time round, they're going to be a little bit gentle with this, but they're expecting everyone to comply completely by the 1st of April next year.
Yet, some of these regulations that control this, are they EU regulations or are they British regulations?
No, this is British. Yeah, This is absolutely nothing to do with the good folks in Brussels.
Okay, so there's clearly a lot of flaws in terms of it could be better, but what are some of the flaws that are really surprising you and think will be very dangerous for companies?
Well, the three big ones for me is firstly the volume, not value point. And what I mean by this is when you report the number of invoices in the different buckets, what you have to report is the number of invoices paid, not the value of invoices paid. So you could pay, one invoice that's 60 days plus, but it might be worth 100 million pounds, yeah, and you'll just report one. And if you compare that with any kind of internal payables performance measures, usually value is far more important to people than volume. And equally, if you're a supplier, and the whole point of this is supposed to be to name and shame people who are paying late or paying on very long terms. The fact that someone pays a handful of invoices probably on 60 days plus is not going to be very meaningful to anybody. I think the second and probably in some ways the most important point here is how you're supposed to calculate a due date. Now, in most systems, due dates are calculated from the actual invoice date, and what this regulation is saying is that you have to count it from the invoice receipt date. Now, in principle, that sounds very simple, but most ERP systems do not record an invoice receipt date, and even those people who have scanning systems, assuming they use them well, who have this kind of automatic date stamp, don't necessarily have those scanning systems interfaced with their ERP systems. I think there's going to be a lot of people out there who are going to be asking the question to say, well, where am I supposed to get this data so that I can report in line with the regulations?
But the invoice receipt date is actually really quite important, because somebody submitting an invoice on, say, Friday and then not actually delivering it until 2 weeks later,
mm-hmm.
they will be the buyer will be criticized. Does that mean we are going to start to see systems developed so that they automatically record receipt date? No,
I don't think so. And the reason for that is that most of the systems that people use, that they're not UK specific. That programs like SAP and Oracle and many others, yeah, they're not designed for UK use. They're designed for global use. So it's very unlikely that someone's going to change all their programming just for their UK base, which is a relatively small fraction of the global ERP market. If this was the United States, that'd be different, but it isn't. So I'd be very surprised if such a thing changed. The other bit is, if we talk about accounting regulations, and when title changes, that's one of the key reasons why we have invoice date in accounting systems, in the way we do. Because it's the tax point of the invoice, say for VAT purposes and stuff like that, and that applies globally. So changing this because it's UK specific, it's not impossible, but I think it's quite unlikely.
And that you've got a third problem that you think is important.
Yeah, well, according to this regulation, if you have a supply chain finance scheme in place, then if you have to report on how many days your supplier gets paid. Now, I understand the logic of that, but the problem here is that you're not paying the supplier anymore. It's your finance provider, probably a bank, who's paying the supplier. And in this case, the bank has a contract with the supplier, which you're not necessarily privy to. So therefore, that's confidential information between the finance provider and the supplier, not between you and the supplier or you and the bank. So I'd imagine most banks, if you ask for this information, they'll tell you that they can't give it to you because it's confidential.
This sounds bad, but what else can we expect in this area in the UK?
Well, I think there's a pattern here. Okay, the first legislation that was put on the books around late payment in the UK was back in 1998, and we've seen two European directives. Now we see this bit. We see in other countries far stricter legislation coming in very selective places. So the trend is for legislators to keep getting involved here to try and fix something. But the fundamental problem every time is they don't actually really understand what the real problem is, and they don't understand the way the transaction works, which means that when you then put together this kind of detailed legislation, it comes out wrong because they don't understand the way it works.
But does anybody care? Does this matter? Can't we just ignore it? The companies ignore it?
I think there's lots of other things which have been ignored. But I think in this particular case, if I was an audit firm, I'd be absolutely delighted by this legislation because they're probably the people who are going to have to enforce the fact that companies actually comply with this as part of their audit routine. So that basically means they get more work, and obviously they'll get paid for that. But the bad side about this is that it just means more work for the finance people in this world. Personally, will it make any difference to real late payment going on in the UK? I doubt it.
Oh dear. And will Brexit make any difference?
Well, this is entirely Westminster-driven legislation. This is nothing whatsoever to do with the EU. So expect it to stay.
Thanks, Brian. Very interesting as always. But we have some problems coming up, I think.